Hello, ladies and gentlemen. I'm Alex from WA Trading, and today I'm going to be breaking down one of our latest trades, USDCAD shorts, so you guys can have a small insight of what sort of breakdowns we offer inside of our community. In case you guys want to refer to a full written breakdown, I will highly recommend to go and check our last Instagram post. I'm going to be leaving the link on the description, but now let's get into this. Okay, so now let's get into this. So USDCAD shorts, I'm gonna be breaking it down from a higher time frame perspective to a smaller time frame perspective, giving you some small insight of what exactly we do in terms of how we break down our trades, how we properly send them into the community, and how do we build our strategy or our case around every single trade. So first of all, from a higher time frame perspective, so we go from a weekly scenario, as this is a swing trade idea with some sort of scalp entry on a smaller time frame, but higher time frame is really important to properly understand what sort of market we are in. So now on a weekly time frame, we can properly see we're in a downtrend. After this big push to the upside, we got in a break of a structure, and now market is creating lower highs and lower lows, lower highs and lower lows, lower highs and a new lower low. Perfect. So now on a weekly perspective, we knew we're in a downtrend. By the way, the trade, even though this current price action is here, the trade was literally from this point in here to this point in here. So that's the point that we're capitalizing on it. Around 17 days, 3 weeks more or less of price action that we took to the downside. That's from a weekly perspective, of course. Now we're gonna be going into smaller time frames, but so you guys get some sort of perspective of why exactly or where exactly we were looking into a weekly time frame. Now let's switch into a daily time frame. So when we go into a daily time frame, okay, yes, we could see we have some sort of accumulation, okay, something that we also teach, and that's 20% of our strategy. We knew the market will come and mitigate these levels in here on a smaller time frame too, okay, just to tell it more or less. But after a full accumulation, we had some sort of a spring. So this level was maybe an important level of interaction that the market could come in the future, not only as an entry but also as a target, something that we're going to be covering in this video too. So from a daily perspective, we knew we get a push to the upside coming into higher weekly levels of supply, okay, all this area in here, okay, all that area in there, sorry for my lines in there. But okay, so from a weekly perspective, we already covered that. Daily perspective, the market look like it's accumulating. We have a spring level that come and mitigate in the future. Also, price action was sitting in this level in here, supply level of the weekly. So now we have to start to make our full case, right? So we know weekly is bearish, daily is bullish, but maybe meeting its purpose of making the weekly retrace. And now we start to get into a smaller time frame, more intraday perspective, right? So now when we get into H4, things start to get a little bit more interesting in here. So once I see this, I can really start to see also liquidity, potential targets. Really important when we're building our case or our trade idea, we have to understand that Wyckoff is amazing, market structure is amazing, but we have to also have targets of where the market is heading. So after getting our overall sense of the weekly was bearish, daily bullish, but maybe meeting a purpose, or with levels of interaction that we can go and come lower to mitigate or to fill in, that means that after this whole leg of the daily to the upside, we have to be focusing on, if I'm expecting a retracement of the daily, okay, or even a new lower low to be created, like in this case on the weekly, we have to see some sort of price action building in these higher levels that is telling us or is giving us that intention that bearishness or selling or supply is entering into the market, so we can properly now start to be selling the market pro trend, right? So also we have to be really patient when this happens. We have to align market structure too, and after that we just go and focus on future levels that we know the market can come in the future. Okay, so here we can see we have equal lows in here. Okay, liquidity was building up, and then we have some sort of a spring level of a possible accumulation or potential. Okay, we still didn't know. Of course, price action played already in here, but I mean when I was building the case. Okay, so you guys get a little bit of sense. My trade was exactly from that week. Okay, I will be breaking it down in a bit, but first of all, I'm building more my targets to see if I can have actual levels that I know the market can come and mitigate in the future. So now also another important level was all this level of demand or support, like this one. Okay, that here it took out this liquidity, created a quick or big push to the upside, and now it could be a place of interaction or potential buys, or even to close our potential sells like we did personally. So after that, okay, this level was really important. Okay, something I'm gonna be covering too. When we have a demand level or a support level in the middle of our target, right, is that meaning that we're gonna be closing our trade? I don't like to do that. I prefer to look for hedging or buying positions at that level, as that makes much more sense for our selling positions. So after that, after the big push happened to the upside, I know I have a middle target. We can call it, for example, right now TP1, just for the sake. TP1, okay, in there, or possible reversal area, okay, and then TP2 down here. Let me put it in here, okay. TP2, okay. That's one option. Okay, that's totally fine. Again, it's really important also to, once market is going in our direction, understand that if we have a nice risk reward already, it's important also to take some money home. That's really important. But at the same time, once we start to properly understand how the market behaves, or really important levels of interaction, as I was mentioning before, this level in here, instead of being a TP1, can become a TP1 for some people, or a hedging place. Hedging place. Perfect. Why? The reason is because, let's say, just put the case scenario here. Okay, let's say that we are selling from this point in here like we did, and let's say we are up like 20% just in this movement in here. Yes, it's amazing to go and capitalize on it, but we have to understand that for our full target in here, or below here, like we close in there, there's still 111 pips. Okay, that means that for our style of trading, that could literally be doubling our trade. So if this was a 20%, in here we ended up being like a 1 to 35, right? So we were losing on a 15% potential just because we were taking partials in here or taking profit in here. Again, nothing wrong with it. Just I prefer, in my case, for my style, when I have a really interesting level that I know we can come in the future, I just prefer to go and look for buys if presented. Okay, again, we also teach how to properly enter in these levels. It's not just like placing a limit or just guessing like that. We really like to look for center confluence in this area to actually be looking for that buying position. In case that it plays, we can trap the market. Something that probably you guys have seen on our Instagram, that a lot of times we have a selling position, a buying position, just in case this comes to the upside, and now we just let the market go and decide which side we want to go. So maybe bullish and create new higher highs, therefore break my weekly structure, or just continue the overall trend of the market and then come and create new lows, like in this case it did. Okay, just wanted to mention that for a second. So now this was literally just to properly understand levels of interaction of demand or support as targets. Okay, but now most important, we're gonna be getting right now on the entry. Why did I enter in there? Now that I understand my take profits or levels of interaction, I'm fine with it. That's the reason why while price was here, I was actually building my idea. But now, why I entering here? So again, as I've mentioned before, okay, we were sitting on a weekly supply up here. let me change this color to red. That's what we call it. Okay, so we're sitting on a weekly supply. Yes, daily was bullish, but weekly was bearish. So now we have to properly now go down into a smaller time frame to start to see what price action we were getting more in an intraday perspective. Again, higher time frames are more for direction. Intraday time frames are the ones that are giving you intent of the market of going higher or lower. So what I could see literally right here, let me remove these things. We already have the levels in there, but after we have this price action, really clean price action, what we could see is that after going in here, market structure creating new higher highs, okay, we tapped into our supply, okay, weekly supply level, and after that we see the market coming, making a retracement, failing to create new higher highs, and then we start to see really nice bearish intention to the downside. So that's already clicking in my side. Say, okay, that means we might most likely or potentially come into lower levels as we had targets or really clean targets to go and mitigate or to go and reach in the future. So now go and I mark my supply area in here. Okay, after the new push, retracement comes in play. After that, we mitigate in here. We also took some liquidity out of these highs. Okay, we took out that liquidity in here. And also something really interesting is after taking that liquidity and making a new push to the downside, showing me more bearish intent, I could properly see how we were building liquidity to the downside in here. Something also we go and cover in our, something really important to understand liquidity. So that way we know where the market could be or potentially be heading next. So after that, I see that we are taking out liquidity to the upside. I see we're tapping into our weekly supply. I see we're failing to create new higher highs, and I see some bearishness intention to the downside. So this is starting to make sense on an intraday perspective. But again, this is just H1. So I have to go deeper or lower into my time frame so I can properly get my stop loss as smaller as possible. Again, what I don't want to see is like a 20 pip stop loss, 25, 15 pip stop loss, because that means I will just be getting a 1 to 3, 1 to 5 risk reward. Again, when I'm risking my money, I'm kind of risk averse in that sense. So I like to be risking my money when I see a potential trade that is at least a 1 to 10. That's my criteria. I don't go lower than that in the sense of me risking my money. So after that, let's get into this 15. We go to a 15 time frame. Okay, what do we see? Clean price action to the downside. Okay, let me erase this. Let's get into that level. Okay, we see the liquidity that was building in here, this support level. We took out that one up here into this supply. Quick move to the upside. Also now we have a level here of interaction or supply that we knew the market can come and tap in here. Okay, some people will ask why are we choosing this one specifically. This is actually a level that we properly teach in our boot camps again, so I cannot get into too much detail into this, but this is a supply level. Let me put it in here as an intraday supply level. Okay, again, just remember, just for the sake of getting back into it, I'm just building a case based on a higher time frame perspective, weekly bearish, daily coming into those weekly supply levels. Now H4 had really nice targets to go and mitigate or to go and reach in the future. H1 started to show really nice intent to the downside, so that's why I'm starting to build my scenario, aligning my weekly, my H1, and now my M15 with that bearish intention to the downside, having liquidity, having targets to meet. And now when we come into this intraday supply level and based on M15, I have to have some sort of smaller time frame confirmation. I have to have some sort of a smaller time frame confirmation. I don't like to guess. I don't like to actually put a limit like that. I just like to see price action and see how it properly develops in my level. So after this, I'm making that level as an important one. Okay, let me go into M5. So now my entry was based on an M1 time frame, but let me do it in M5 so you guys can properly understand it and follow me. So now after this, once we tap into this level, what can I see properly? I see liquidity was building up in here again, okay, inside my supply level or point of interest. We like to call it also point of interest, as are levels that we like to monitor price action in there. And after that, what do I get? Again, I get a run of liquidity to the upside, and after getting that, I really like the intention where we went and we pushed lower. After that intention lower or that new lower low is created, what do I like to see? A retracement, right? So that's where I start to build up my idea on. Just for the people that know a little bit about smart money, that will be your common smart money candle or smart money traditional way. Okay, we have our own refinements. So instead of 9.5 pips, my stop loss was actually 7 or 6.5, so it's literally like 30% lower than the common smart money based on our IFC, refined IFC that we call it. But let's leave it like that for now. And after that, okay, again, as I was mentioning, run of liquidity to the upside, nice bearish intention to the downside, small retracement to the upside again. Now is where we place our limit or our trade, and then I will just put your stop loss you place your stop loss just on a higher level of that week to be safe in there, and that's the traditional smart money. Just remember that. Okay, and now from there, moving forward, what's my goal? Remember what my goal was, at least to come and take out this liquidity. But we have to understand that from a higher time frame perspective, okay, let's call it right now H1 perspective, this was my lower high that created my lower low. So if this is my potential, again, potential new lower high, okay, at least I want to see my level come to new lower levels below this point in here, or this price in here. And now I come into this demand level that I actually marked based on H4. So that was my target. Okay, as I was mentioning before, this is really important. Okay, as we had also a lower level in here, okay, look like this, 1 to 13 risk reward. Now look like this. If we come to our last target, it's gonna be a 1 to 23. Okay, remember my trade was based on a 1 to 35. But just for the sake of showing it like this, what's the problem in here? We're losing, as I was mentioning before, okay, we're losing a lot of potential percentage just because closing here. So rather, or better than that, in these levels is how we properly teach on how to hedge your position and how to actually look for a buying position in these demand levels that can actually make a retracement, and then we can hedge the market and be trapping it from a selling and buying perspective, and then expect the market that if we break this low in here, if we break this demand level, with a high probable scenario will come to meet this demand level down here. So that way we are not partialing out our position, and this 1 to 14 can end up being a 1 to 23 or 1 to 25. We even take it to the low. Okay, that's something really important. Again, something, just watching price action like this. Let's even go into M15 for a second on an intraday perspective. Once we saw price action didn't allow us to buy in this demand level was broke to the downside, and this is where price action allowed us to enter one more time in here to sell. I missed this opportunity personally, but it was textbook entry, but I missed it. But after that, I was able, after this new push, to capitalize on, this next sell entering here with a lower time frame confirmation, and then took it to the downside to this extreme level in here. Okay, so you guys will see on Instagram that my trade has not only this position, but ended up also taking this one from there, just scaling in my position from a selling perspective, just because price action on the way to the downside was developing really nicely with really nice legs to the downside. So I was just waiting for price action to develop and see if it actually allowed me to put more entries on it. And once it reached this level in here, and a new lower low compared to that one. After we came in this level of price action below here, below this low, this is when I closed my full trades, not only the higher one but the lower one. I was happy already with my risk reward. The higher one is the one that will be posting on Instagram. Okay, this was a 1 to 35 and this ended up being a 1 to 32. Really nice trade. And again, something really important also I want to mention, and this is the power of it. This ended up being a 1 to 35, okay, risk reward. And this trading here, which is half of the move in terms of pips, ended up being a 1 to 33. So what I want to explain with this is, not only is important to enter as high as possible, like sometimes price action in here or in a higher level might not be clean, not this case, but might not be clean. And just because of being patient and waiting for new structures to develop, you might end up finding an entry that literally meets your criteria and literally is a really good trade, just 2% below the higher one. And we have to understand that there's a difference of 100 pips. So a difference of 100 pips ended up being just a difference of a 2%, just because here my criteria was met more clean on a 30-second time frame. So in here, even though it's just a 2% difference on a 100 pip move, I was actually able to capitalize with a 33% of a trade, just because I was actually able to enter on a 30-second time frame, when up here my criteria was met on a 5-minute time frame. So my trade was based on a 5-minute time frame. All this whole move was a 1 to 35. Again, nothing against it, amazing trade. But then this lower one almost was the same trade, with being literally half of the position in terms of pips. Okay, so that's something really important. Don't focus too much on pips. Focus much on percentage, on return, and that I think will be really helpful in the future. So I wanted to share that. Hopefully all this breakdown made sense. Again, anything you guys need, reach out to us on Instagram. We're gonna be leaving a link. Okay, so hopefully all this breakdown made sense, okay, from a higher time frame perspective into a M15 perspective into a M5 entry, ended up being a 1 to 35. So hopefully that made sense. Also, hopefully you guys more or less took value in terms of how to properly, or which levels you can hedge in the market so you guys don't lose percentage. Also in the terms of being patient and waiting for price action to develop, as it might give you some sort of entries in the going price action. Also, that's also really important. And for everyone that it was watching this video and you guys think it was really helpful or it can help you on your trading, as I just gave some sort of insight, I will highly recommend to go and book a call. I'm gonna be leaving a link on the description, so you guys can go and book a call with our student success coach, so you guys can see if you guys are eligible for our bootcamp and you guys meet the criteria that we put into it. But in terms of that, you guys need anything else apart from that, you guys can DM us on Instagram. That I'm gonna be also leaving the link on the description, WWE Trading. And yeah, hopefully you guys took some value from this call. We'll be doing more on a weekly basis. Have a great day. See you really soon.